In today's world, many investors want more than resilient financial returns. They want their investments to also have a positive social impact. QIC manages more than 100 billion Australian dollars worth of assets, and they believe that it's vital to invest responsibly so that people and planet can also prosper. Here's more from Brisbane.
Andrew, hello and a very warm welcome.
Hi Sharon, thanks for having me. It's great to be with you.
First of all, tell us about how QIC's investment process works.
Our investment process is enabled by a thematic and sector-centric approach to building our pipeline. The strategy is enabled by industry megatrends, which we think is going to really underpin investment performance over the long term. And we categorise those investment trends using the 3 Ds: decarbonisation, decentralisation and deglobalisation. Now, when we think about decarbonisation, our existing portfolio is a good place to start. We've got around $9.5 billion Australian dollars invested in companies that are helping to transform to a low-carbon economy, and those energy platform assets have a growth pipeline of close to $15 billion over the next 5 years. When we think about deglobalisation, we really think about the impacts of the disruptions in the global supply chain, how there'll be the onshoring of infrastructure that's going to help drive resilience, and importantly, kind of the sovereign decisions that are being made in this space. And then finally, when we think about decentralisation, the energy mix is going to be shifting significantly. And an example is we've got a business called Pacific Energy, which is a provider of remote and standalone power stations to mining customers and remote communities across Western Australia.
You mentioned decarbonisation presenting generational investment opportunities. Tell us about how the energy sector is going to be transformed by these initiatives as we head towards net zero.
I think we're going to see a steady and, in fact, a growing acceleration in the use of clean energy technologies across all sectors. As these grow and in fact rapidly scale and take up a greater percentage of the global energy mix, they're going to drive huge opportunities for institutional investors. And importantly, many of these may also drive resilience to the physical climate change, which brings an even more attractive risk-return equation.
How does your active asset management really focus on building resilience and improving outcomes for your clients and for communities?
As a control investor, we work really closely with the management teams and the boards of the portfolio companies. And we do this to identify and then act on their most significant ESG priorities. Now, a fundamental way that we create an impact is where we support these management teams kind of build their capability and governance maturities. Now, the sustainability issues that we're all seeing are very dynamic. And so we place a really high value on a company's ability to take a strategic approach to sustainability. And importantly for our clients, we take both an asset but a portfolio-wide lens so that we can give them insights into their exposures and then work with them around different investment tilts that might meet their objectives. Now, this is a level of transparency that we think investors should expect so that they can make informed decisions.
How do you assess portfolio companies for investment opportunities?
We don't take an exclusion approach to our investments. Rather, we look at our investment opportunities that will evaluate how resilient a portfolio company is going to be over the long term. Now, to do that, we need to assess all of the material people, customer, community, stakeholder and environmental issues. Now, we have to have confidence that that investment and the associated business plan will deliver returns over the long term. That's not just understanding the dynamics of the business today, but importantly, how and the environment it will operate in for the next 10, 20 or even 30 years. I think being an infrastructure long-term investor means we've got more of a bias to understanding and being a contributor to those positive social and environmental outcomes over the long term.
Tell us a bit more about your ESG targets for both your new flagship fund and your existing funds.
Well, for our existing funds, we set some net zero by 2040 goals, which we know are ambitious, but importantly, we set because they would add value for those companies and help de-risk them from climate-related risks. For new funds, we're able to leverage our experience in what can really fast-track value through these companies in both the E, the S and the G. Now, for the new fund and portfolio companies, they need to set a science-based target, which again holds up to rigour in the market and importantly, really sets these companies up for success in that low-carbon economy. We have the opportunity to place a diverse pool of directors on our portfolio companies, both on gender as well as broader diversity metrics relevant to the geographies in which they operate in. And finally, the governance will focus on things like who's the accountable executive, what's the right board, governance structures, and then importantly, how do we set management KPIs, whether short or long term, that line up against the most material sustainability issues for that company.
Give us some examples of how your operating strategy can really help to benefit people and communities.
I think lining up business models with really positive outcomes for customers, community and the environment gives us a clear line of sight in terms of value for organisations over the long term. Now, we're acutely aware that we have responsibility as stewards of our clients' capital, many of whom are superannuation and pension funds who contribute to millions of people's quality of retirements. And we also know that infrastructure assets can hold really privileged positions in society. They provide essential services and are fundamental to kind of building prosperity for the regions that they serve. And this is a responsibility that we take really seriously.
Andrew Sellick, many thanks for joining us today from Brisbane.
Thanks, Sharon. It was my pleasure.